the company that quietly changed its identity. From ship wires to India's next electrical intelligence story, every multibagger has one thing in common. Before the market recognizes it, the company has already started changing. But here's a question for you. When you hear the name Marine Electricals, what comes to your mind? A company that installs electrical panels inside ships? A small engineering contractor working only with the Navy? Or just another industrial stock that moves whenever defense stocks become fashionable? If that is what you think, then you're looking at today's company with yesterday's lens. And in the stock market, that is often the most expensive mistake. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Imagine you are watching an old family restaurant. For years it serves only one neighborhood. Business is decent. Customers are loyal. Profits are steady. Then something interesting happens. Instead of opening one more restaurant nearby, the owner starts learning cloud kitchens, then food delivery, then packaged foods, then exports. Now ask yourself, is it still the same restaurant? Or has it quietly become a completely different business? That is exactly the story unfolding inside Marine Electricals. Because this is no longer just a company making electrical panels for ships. Over the last few years, management has been slowly rewriting the company's identity from a marine-focused electrical solutions provider into a broader engineering and technology company spanning defense, industrial automation, data centers, ports, and even EV charging infrastructure. The company's own investor presentations reflect this widening scope over time. And this brings us to the first mental model of today's story. Mental model: identity shift. Businesses don't become extraordinary overnight. First, their identity changes. Then, their customers change. Then, their earnings change. And only much later, their stock price changes. Most investors notice only the last step. Great investors try to notice the first. Now let's zoom out. Marine Electricals belongs to one of the most interesting sectors in today's Indian economy. Not because it is glamorous, but because it quietly sits behind almost every major investment happening in the country. Think about it. Whenever a new naval ship is built, someone has to design the electrical nervous system. Whenever a data center comes up, someone has to ensure uninterrupted power distribution. Whenever a metro project expands, or a pharmaceutical plant is commissioned, or a large industrial factory starts operating, all these projects need sophisticated electrical engineering, automation, and control systems. Nobody inaugurates these systems. Nobody clicks selfies with electrical switchgear. Yet without them, nothing works. Electricity inside modern infrastructure is like the nervous system inside the human body. You don't notice it until it stops working. That is why this sector rarely grabs newspaper headlines. But it quietly benefits whenever India spends more on infrastructure, manufacturing, and defense. And today, several powerful tailwinds are blowing together. India wants to manufacture more instead of importing. Defense production is becoming increasingly domestic. Shipbuilding is receiving fresh policy attention. Industrial automation continues to rise because companies want greater efficiency. Data centers continue expanding as our digital lives consume more computing power. Electric vehicles require charging infrastructure. All these trends have one thing in common. They require electrical intelligence. Not just electricity. Electrical intelligence. And that changes the size of the opportunity available to companies operating in this space. But every story has another side. Engineering businesses also face headwinds. Projects can get delayed. Raw material costs can fluctuate. Payments often arrive months after work is completed. Working capital can remain tied up for long periods. Growth may look spectacular on paper while cash arrives much later. In other words, this is not the kind of business where products are sold today and cash reaches the bank tomorrow. Patience is part of the business model itself. Which brings us to another important question. If the opportunity is becoming larger, Why don't all companies become winners? Because opportunities don't create wealth. Execution does. And this is where the story begins to become interesting. When we compare Marine Electricals presentations across the years, something subtle stands out. Earlier, the company mainly introduced itself through its marine expertise and integrated electrical solutions. Gradually, it started speaking about industrial automation, then data centers, then broader industrial applications, and later about EV charging, electronics, and wider technology offerings. That tells us something. Management wasn't merely trying to grow revenue. It was trying to expand the company's addressable opportunity. Think of it like a tree. If you keep watering only one branch, that branch becomes stronger. But if you grow new branches, the tree itself becomes larger. Marine Electricals appears to be attempting the second approach. Now here's something fascinating about the stock market. The market rarely pays premium valuations simply because a company is growing. It usually pays a premium when it starts believing that the company's future is becoming larger than its past. Sometimes that belief proves correct. Sometimes it doesn't. That is exactly why understanding the business comes before judging the stock. Because a chart may tell us what investors are doing, but only the business tells us why they might continue doing it. And that is where our story truly begins. In the next chapter, we'll go much deeper. We'll explore why Marine Electricals isn't merely selling electrical equipment. It may actually be selling something far more valuable: trust, qualification, and mission-critical reliability. And surprisingly, those invisible assets are often worth much more than factories. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Before we move ahead, I'd love to hear your thoughts. Which part of this chapter connected with you the most? And what would you like to see explained even better as the story unfolds? Chapter 2. The Invisible Moat. Why can everyone build a panel, but very few can win the order? Let me ask you something. Imagine tomorrow someone gives you unlimited money. Could you open a company that manufactures electrical panels? Probably yes. You could buy machines, hire engineers, rent a factory, purchase raw materials. Within a year, you might even produce a decent-looking product. Now let me change the question. Can you convince the Indian Navy to install your electrical system inside a warship? Now the room becomes silent. Because in businesses like Marine Electricals, the biggest barrier is rarely manufacturing. It is permission. It is trust. It is qualification. And that changes everything. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Think about boarding an aircraft. Have you ever asked which company manufactured the electrical control panel inside the cockpit? Probably not. Because passengers don't buy airplanes. They buy confidence. The same logic applies to defense ships, submarines, offshore platforms, data centers, and industrial plants. Nobody wants the cheapest electrical system. They want the one that never fails. Because failure is incredibly expensive. A shopping mall can lose customers. A factory can lose production. A data center can lose millions within hours. A naval vessel cannot afford failure at all. That is why this industry rewards reliability far more than low pricing. Marine Electricals has spent decades building relationships in exactly these mission-critical environments. Over time, the company has highlighted its work across the Indian Navy, Coast Guard, commercial shipyards, industries, ports, data centers, and other critical infrastructure, while expanding from electrical systems into automation, electronics, and related technologies. Now let's introduce today's mental model. Mental model: switching cost. Imagine you visit the same doctor for 15 years. He knows your history, your medicines, your allergies. Now another doctor opens a clinic next door and charges half the consultation fee. Would you immediately switch? Probably not. Because the cost of making a mistake is far greater than the money you save. That is called switching cost. And businesses love high switching costs. Marine Electricals operates in industries where changing suppliers is rarely a simple commercial decision. Every new supplier must prove quality, pass multiple certifications, demonstrate reliability, and often spend years earning credibility. That means the company's real product isn't only electrical equipment. Its real product is confidence built over decades. Confidence cannot be manufactured overnight, and investors often underestimate businesses built on trust rather than tangible assets. Now something else quietly changed inside the company. If you compare the earlier presentations with the latest one, you'll notice the company isn't describing itself only as a manufacturer anymore. Instead, it increasingly speaks about integrated solutions. That sounds like a small change. It isn't. Think about building a house. One contractor supplies cement, another supplies steel, another installs wiring, another paints the walls. You coordinate everyone. Now imagine hiring one company that manages everything from planning to execution. Suddenly, you're paying not just for materials. You're paying for convenience, for accountability, for integration. That is exactly what Marine Electricals appears to be moving toward. The company talks about offering design, manufacturing, installation, commissioning, and after-sales support instead of only selling equipment. Earlier presentations positioned this integrated approach across marine, industrial, and building applications, while later presentations broadened the technology stack further. And here comes another interesting observation. If you look carefully at where management has expanded over the years, you notice a pattern. Data centers, metro projects, industrial automation, ports, EV charging. These may appear to be completely different businesses. But underneath, they all need the same capability: reliable electrical intelligence. This is where another investing concept quietly enters the story. Not every company grows by inventing something revolutionary. Some companies grow by taking one core capability and applying it to many industries. That creates optionality. Notice I didn't say certainty. I said optionality. Mental model, optionality. Imagine someone knows how to build excellent roads. Today they build highways. Tomorrow airports. Next year industrial parks. The skill remains the same. Only the destination changes. Marine Electricals seems to be following a similar path. Instead of learning an entirely new business every few years, it is stretching the same engineering expertise across larger markets. That doesn't guarantee success, but it increases the number of doors the company can knock on. Now let's talk about something investors often ignore: management. Many people look only at the promoter's shareholding. Very few ask who is actually running the business every morning. The latest presentations show something remarkable. The leadership team increasingly includes professionals with backgrounds from the Indian Navy, Defense, R&D, Motorola, L&T Defense, and large engineering organizations. Several executives bring decades of operational and naval experience, reflecting a deliberate effort to strengthen execution capability rather than rely only on promoter leadership. Why does that matter? Because large engineering companies don't scale only with factories. They scale with people who know how to execute complex projects. Factories build products. People build organizations. And perhaps that is one reason the company has gradually expanded its manufacturing footprint while also strengthening service centers and leadership bandwidth. The evolution visible in the investor presentation suggests management has been preparing for a business larger than the one it operated just a few years ago. But before we get too excited, every great story deserves a difficult question. If the business quality is improving, why hasn't everyone already become rich owning the stock? Because even wonderful businesses have uncomfortable realities. Engineering companies don't collect cash the way software companies do. Projects take time. Payments take time. Working capital stays locked. And that single characteristic can separate accounting profits from actual cash generation. That hidden tension between growing earnings and converting those earnings into cash is where the next chapter begins. We'll uncover why one financial number can completely change the way you look at marine electricals. Sometimes a company appears to be sprinting, while its cash flow is still catching its breath. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. As we move into the financial heartbeat of the business, tell me this. Did this chapter make you look at competitive advantage differently? Or is there a part of the story that you think deserves an even clearer explanation? Chapter 3. When growth looks beautiful, but cash asks a different question. Is marine electricals becoming stronger? Or is the market simply getting excited? Let me ask you a question. Suppose you own a construction company. This year you complete 10 luxury apartments. Customers congratulate you. Your accountant tells you profits have doubled. Everyone around you celebrates. But when you open your bank account, there isn't much cash. Because most customers have promised to pay 6 months later. Now tell me honestly, are you rich? Or are you waiting to become rich? That single question separates accounting from investing. And today, it separates a good company from a great company. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. So far, we've discovered that marine electricals is changing its identity. We've seen how it is moving from a marine-focused engineering company toward a diversified electrical technology platform. We've understood its competitive moat. But now comes the chapter where numbers begin telling their own story. And surprisingly, they tell two different stories at the same time. The first story is easy to see. Revenue has grown consistently over the last several years. Profits have grown even faster. Margins have gradually improved. Return on capital has strengthened. On the surface, everything looks like a business entering a stronger phase. But every experienced investor knows something. Numbers are like photographs. They show what happened. They don't automatically explain why it happened. That is why we need another mental model. Mental model, the iceberg. Imagine watching an iceberg floating in the ocean. Only a small part is visible above the water. The much larger part remains hidden underneath. Financial statements work exactly the same way. Revenue, profits, earnings per share. These are the visible portion. Working capital, cash conversion, customer payments, execution quality. These remain below the surface. The smartest investors spend more time studying the hidden part. And this is where marine electricals becomes fascinating. Look at how the business has evolved. Sales have almost doubled in just a few years. Profits have expanded much faster. Operating margins have also improved. That tells us something important. The company is not merely selling more. It is earning more from every additional rupee of business. Think of a bakery. The oven costs the same whether it bakes 100 loaves or 200. Once fixed costs are covered, every additional loaf becomes more profitable. Businesses call this operating leverage. You don't have to remember the term. Just remember the bakery. Marine electricals appears to be benefiting from exactly this phenomenon. As manufacturing capacity, engineering expertise and execution improve. Every new project begins contributing more efficiently to profitability. And that is precisely what long-term investors like to see. Because sustainable wealth is rarely created through rising sales alone. It is created when profits begin growing faster than sales. But before we celebrate, there's another side to the story. Remember the apartment builder we spoke about? Marine Electricals works in businesses where projects are large. Customers are sophisticated. And payments often arrive much later than the work itself. That means profits can rise today, while cash arrives much later. And this is exactly why the company continues to carry relatively high receivable days and experiences fluctuations in operating cash flow despite improving profitability. Now don't misunderstand this. This is not automatically a red flag. In defense, industrial engineering, marine projects, large infrastructure, long payment cycles are almost part of the business model. The important question is different. Can management gradually improve cash conversion while continuing to grow? That is the question institutions quietly ask. Because ultimately, companies don't survive on reported profits. They survive on cash. Now let's move to something investors often misunderstand. Return ratios. When people hear return on equity or return on capital, their eyes usually glaze over. Let's make it simple. Imagine two shopkeepers. Both invest 1 crore. One earns 10 lakh every year. The other earns 20 lakh. Which shop would you rather own? The second one. Because it produces more earnings from the same amount of capital. That is all these ratios are trying to measure. How efficiently management converts invested money into profits. Marine Electricals has gradually improved this efficiency. That improvement tells us management isn't merely expanding. It is learning to use capital more productively. And businesses that improve efficiency while growing often command better market valuations. Now comes one of my favorite investing ideas. Mental model, quality versus cheapness. Imagine you need to buy shoes. One pair costs half the price. The other costs more, but lasts 5 years. Which one is actually cheaper? Most people focus on the price tag. Very few calculate the lifetime value. Stocks work the same way. Many investors search for the cheapest company. Professional investors usually search for the best combination of quality and reasonable price. Marine Electricals doesn't appear inexpensive when viewed through traditional valuation measures. Its earnings multiple stands above many industrial peers. Its price compared with book value also looks demanding. Now here's the interesting question. Is the market overpaying? Or is the market paying in advance for future growth? That is where valuation models become useful. Let's simplify them. The price to earnings model asks, how much are investors willing to pay for today's earnings? Marine Electricals trades at a premium because investors believe tomorrow's earnings may be much larger than today's. The PEG model asks, is growth strong enough to justify that premium? Instead of judging only the valuation, it compares valuation with expected business expansion. The price-to-book model asks, how valuable are the company's assets? Engineering companies traditionally looked attractive using this approach. But businesses increasingly driven by design capability, customer relationships, and execution quality often deserve more than just the value of factories. The discounted cash flow model asks a completely different question. What are all the future cash flows worth in today's money? Notice the emphasis. Future cash, not future excitement. That is why improving cash conversion will remain one of the biggest factors deciding whether today's valuation eventually proves justified. The earnings power approach asks, if growth slows tomorrow, can today's business still produce healthy profits? For Marine Electricals, that answer is gradually becoming stronger because profitability itself has improved. And finally, there is the replacement cost way of thinking. If someone wanted to build this company from scratch, they would need factories, engineers, design capability, approvals, vendor relationships, decades of credibility, experienced leadership, defense qualifications, customer trust. Those assets cannot simply be purchased. Many of them must be earned. And markets sometimes assign value to things accountants cannot easily measure. Now let me ask you something. If everything we've discussed is becoming stronger, why do stock prices still move through periods of excitement and disappointment? Because markets don't move only on fundamentals. They move on expectations. Sometimes expectations run ahead of reality. Sometimes reality quietly catches up. And sometimes reality overtakes expectations altogether. That is where charts begin telling a very different story. Not because charts predict the future, but because they reveal how thousands of investors are collectively reacting to the same information. In our next chapter, we'll connect everything: the business, the psychology, the technical picture, the market's behavior, and most importantly, we'll answer the question every investor eventually asks. Is Marine Electricals simply a good company? Or is it becoming a high-conviction opportunity where improving business quality, earnings momentum, and broad market participation begin pointing in the same direction? Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Before we move to the final chapter, I'm curious. Did this financial journey change the way you think about profits and cash? Or is there a concept that you feel deserves a simpler explanation? Chapter 4: When Business, Market Psychology, and Timing Finally Meet. Is Marine Electricals becoming the kind of stock institutions quietly build positions in? Let's play a small game. Imagine there are two shops in your city. The first shop is always crowded. People are buying. Bills are getting printed every minute. The second shop is almost empty. Now imagine both shops are available for sale at exactly the same price. Which one would you buy? Almost everyone says the crowded one. But now let me ask a better question. Would you buy it if everyone already knew it was the best shop? Or would you have preferred discovering it just before the crowd arrived? That is the entire game of investing. Not buying bad businesses cheaply. Not buying great businesses after everyone else has discovered them. But identifying businesses that are quietly becoming better while the market is still trying to understand the story. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Now let's connect everything we've learned. Marine Electricals isn't merely reporting better numbers. It is slowly becoming a different company. Its opportunity size has expanded. Its management bench has become stronger. Its manufacturing footprint has widened. Its customer profile has diversified. Its engineering capability has deepened. And its earnings quality, while still needing improvement in cash conversion, has shown consistent progress. Now comes the interesting part. Businesses move slowly. Markets move emotionally. That is why stock prices rarely travel in straight lines. Some days, the market gets excited. Some days, it gets scared. But underneath all that noise, one simple question keeps getting answered every quarter. Is the business becoming stronger than it was before? For Marine Electricals, the answer over the last few years appears to be yes. Not because everything is perfect, but because multiple pieces of the puzzle are improving together. Now let's understand how markets think. Today's mental model is one of the most powerful. Mental model, the puzzle. Imagine someone gives you one puzzle piece. Can you identify the picture? Probably not. Now they give you 5 more. Then 10. Then 20. Slowly, without anyone telling you, the image becomes clearer. Professional investors think exactly like this. They rarely make decisions because of one quarterly result, or one news headline, or one chart pattern. They wait for multiple independent clues to begin pointing in the same direction. A stronger business, improving earnings, better profitability, increasing execution capability, growing participation, constructive market behavior. None of these alone guarantee success. But together, they begin reducing uncertainty. Notice something interesting. At no point do we rely on only one indicator. Because businesses are never understood through one number. And stocks are never understood through one chart. Now let's connect fundamentals with technical driving behavior. A car. Many people engine tells you whether the vehicle fundamentals fight each other. The steering wheel tells you where it is moving. Would you drive using only the engine? Or only the steering? Of course not. You need both. Fundamentals tell us whether a business deserves attention. Technical behavior tells us whether market participants are beginning to agree. One answers, should I care about this company? The other answers, are more investors beginning to notice the same story? That is why experienced investors don't treat charts as crystal balls. They treat them as crowd psychology. And psychology matters, because markets are voting machines in the short term, but weighing machines over longer periods. When business quality improves, earnings improve, management executes, and the market slowly recognizes that change. Price behavior often becomes healthier, not because the chart created the business, but because the business gradually changed investors' beliefs. Now let's revisit valuation one final time. Remember we said Marine Electricals isn't a statistically cheap stock. That observation hasn't changed. But here's another way to think. Imagine buying a mango tree. One tree already gives fruit every season. Another has just started growing. Which one deserves a higher price? Probably the one expected to produce more fruit over many years. Stocks are valued in exactly the same way. The market isn't paying only for today's earnings. It is paying for tomorrow's possibilities. Sometimes it becomes too optimistic. Sometimes too pessimistic. Your job isn't to predict emotions. Your job is to judge whether the business is becoming more valuable than the market currently understands. And that brings us to the value versus quality discussion. Many investors spend their entire careers searching for the cheapest stocks. But cheapness alone has created very few legends. Imagine buying an old bicycle for almost nothing. Was it a bargain? Maybe. Now imagine buying a reliable truck at a reasonable price. Which one helps build a business? Quality changes the equation. Marine Electricals is no longer competing to be the cheapest engineering company. It appears to be positioning itself as a higher quality engineering and technology solutions provider. And quality businesses often look expensive. Until several years later. That doesn't mean every expensive stock becomes a winner. It simply means valuation should always be judged together with business quality, never separately. Now comes the final question. Would I call Marine Electricals a perfect business? No, because perfect businesses don't exist. Cash conversion still deserves close attention. Working capital remains an important monitor. Project businesses can experience execution delays. Premium valuations leave little room for disappointment. Those realities must never be ignored. But there is another side. Few small engineering companies successfully transform themselves into diversified technology-led industrial businesses. Marine Electricals appears to be attempting exactly that journey. Whether it ultimately succeeds, only time will answer. But the direction of travel appears meaningfully different from where the company stood just a few years ago. And perhaps, that is the biggest lesson of today's story. The best investment ideas often don't begin with explosive profits. They begin with changing businesses, changing industries, changing management ambition, changing customer quality, and eventually, changing investor perception. Because before every great stock becomes obvious, it first becomes misunderstood. Before every re-rating, there's usually a transformation. And before every transformation, there's a management team willing to think bigger than yesterday. So the next time you come across a company, don't ask only one question. How much profit did it make? Ask a better question. Is this business becoming something much larger than what the market still believes it is? Sometimes, that single question changes an investor forever. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. And before we close this documentary, I genuinely love your feedback. Which chapter stayed with you long after listening? And if you could improve just one part of this storytelling journey, what would you change? Because every great business evolves, and so should every great story. Until the next Story Behind Stocks, keep looking beyond the price. Because fortunes are often built by understanding the business before the crowd understands the stock. Chapter 5. The Investor's Lens. The biggest multibagger was never the stock. It was the way you started thinking. Let me ask you one last question. Imagine you are standing in front of two identical-looking seeds. One eventually becomes a small plant. The other becomes a giant banyan tree. Today, can you tell the difference? Probably not, because seeds don't reveal their future. They only reveal their potential. Stocks are exactly the same. The market spends most of its time arguing about today's price. Great investors spend most of their time asking a completely different question. What can this business become 5 years from now? Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Throughout this journey, We never try to predict tomorrow's price. Because prices are opinions. Businesses create wealth. And that is perhaps the biggest lesson Marine Electricals quietly teaches us. When most investors first looked at this company, they saw a marine electrical contractor. Today, many have started seeing an engineering company. Some are beginning to see a defense play. Others see industrial automation. Some focus on data centers. Others notice EV charging. And maybe that is exactly how transformation happens. Not because the company suddenly changes overnight, but because every year it adds one more capability, one more customer, one more industry, one more opportunity, one more layer of trust. And eventually, people realize they have been looking at the wrong business all along. Now think about something fascinating. When Amazon started, people thought it sold books. When Apple started, people thought it made computers. When Asian Paints started, people thought it sold paint. History tells us something. The market usually defines companies by what they do today. Great management teams define companies by what they want to become tomorrow. Marine Electricals appears to be attempting that journey. Not from one product to another, but from one identity to another. Whether it succeeds, only time will decide. But the direction itself deserves attention. Now let's revisit every valuation lens we discussed. Not as formulas, but as questions. The earnings lens asks, can profits continue growing? The company has demonstrated encouraging earnings momentum. But sustaining it will matter far more than achieving it once. The growth lens asks, is the market opportunity expanding? From defense, to industrial automation, to data centers, to electrical infrastructure. The opportunity appears broader today than it was just a few years ago. The asset lens asks, are factories alone creating value? Not anymore. Increasingly, engineering capability, execution, what making remarkable. Businesses that continue improving for many years often surprise even those who believed in them. Not because anyone predicted perfectly, but because compounding itself is difficult for the human mind to imagine. Now imagine 5 years from today. Suppose Marine Electricals successfully strengthens cash generation, continues expanding across defense and industrial infrastructure, wins larger projects, deepens customer relationships, and improves return on capital. Would today's discussion look different? Probably yes. Now imagine the opposite. Growth slows. Execution weakens. Cash conversion deteriorates. Projects get delayed. Would the investment thesis change? Absolutely. And that is exactly how investing should work. Never fall in love with a stock. Stay loyal only to evidence. Because businesses earn our confidence repeatedly, not permanently. That brings us to perhaps the most important lesson of today's documentary. The biggest wealth creators rarely announce themselves loudly. They quietly improve, quarter after quarter, year after year, until one day, the market suddenly says, where did this company come from? But in reality, it was always there. Only the story had changed. And perhaps that is why the name of our channel is Story Behind Stocks. Because every chart has a story. Every business has a personality. Every management has a vision. Every industry has a cycle. And somewhere between all those moving pieces, an investment opportunity is born. So before you buy any stock, don't just ask, is it going up? Ask, is the business becoming better? Don't ask, is it cheap? Ask, is the quality improving faster than the valuation? Don't ask, can I double my money? Ask, can this company become twice as important 5 years from now? Sometimes, those questions produce much better answers. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. If you've stayed with me until the very end, I'd love to hear from you. Not just whether you liked the video, but how you experienced the journey. Which chapter made you pause and think differently? Which idea stayed in your mind after the story ended? And if you were directing the next documentary, what would you keep exactly the same? And what would you reinvent? Because this channel isn't just about finding the next stock. It's about building the next generation of thoughtful investors. Until the next story behind stocks, remember this: markets reward patience, businesses reward understanding, and true conviction is built long before the crowd arrives. Chapter 6: The story isn't over. It's just entering its next season. The biggest returns come when a business crosses the line between possibility and proof. Imagine watching a child learning to ride a bicycle. The first day, someone has to hold the seat. The second day, the child still loses balance. The third day, confidence begins to appear. And then suddenly, without anyone noticing the exact moment, the child starts riding alone. Now tell me, which day was the most important? The first? The second? Or the day everyone finally noticed? The answer is none of them. The most important moment was the invisible transition. The day confidence quietly became capability. Businesses evolve in exactly the same way. And perhaps that is the stage where Marine Electricals is trying to arrive today. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Throughout this documentary, we never tried to convince you that Marine Electricals is the next multibagger, because investing doesn't work through certainty. It works through probability. And probabilities improve when evidence begins to accumulate. Let's go back to the beginning. When we first met this company, it looked like a marine engineering business. Then we discovered it had expanded into industrial automation, then defense, then data centers, then power electronics, then EV charging, then software-enabled charging solutions, then broader electrical infrastructure. Each chapter added another layer, almost like reading a mystery novel, where every clue changes your understanding of the previous chapter. And that's exactly how investing should feel. Not exciting because prices are moving. Exciting because understanding is improving. Now think about India's economy. For decades, India's biggest story was consumption. People buying more, spending more, living better. But today, another story is quietly unfolding. India is building factories, ports, defense manufacturing, industrial corridors, metro systems, data centers, power infrastructure, renewable energy, electrification, digitization, artificial intelligence infrastructure. Now ask yourself one simple question. What is the common thread connecting all these industries? They all require reliable electrical infrastructure. Without electricity, automation doesn't work. Without automation, manufacturing slows. Without intelligent power systems, data centers cannot function. Without electrical integration, modern naval ships remain incomplete. Sometimes the most powerful businesses are not those standing in front of the spotlight. They're the ones supplying the spotlight. Marine Electricals appears to belong to that second category. Not the hero, but the company helping heroes perform. Now comes an idea that changed my own investing journey. Mental model, second-order thinking. Most investors stop at the first question. India is spending more on defense. Good observation. Second-order thinking asks, which businesses quietly benefit because of that spending? The first answer is obvious. The second answer is where opportunities usually hide. Think about airports. When airports grow, airlines benefit. But so do companies supplying baggage systems, power distribution, security equipment, automation, maintenance. The obvious winner attracts headlines. The hidden winners quietly compound. Marine Electricals appears to be positioning itself where multiple long-term trends intersect rather than relying on a single growth engine. And that makes the business more interesting than its name initially suggests. Now let's talk about something investors almost never discuss. Conviction. People think conviction means buying without fear. Actually, conviction means understanding enough to remain calm when fear arrives. Anyone can buy during excitement. The real test comes when the market becomes uncertain. How does conviction get built? Not from social media, not from rumors, not from television. It gets built when independent pieces of evidence begin supporting each other. A strengthening business, better execution, improving profitability, expanding opportunity, management with a long-term vision, healthy participation, constructive market behavior. Notice, none of these alone are enough. But together, they begin forming something powerful, like many streams joining to become one river. That is how professional investors usually develop confidence. Not through one signal, through convergence. Now here's something I find fascinating. If Marine Electricals continues executing well, 5 years from now, people may not describe it as a marine company at all. They may simply call it an engineering and electrical technology company. That single change in perception could become as important as revenue growth itself. Because markets don't merely reward earnings, they reward changing narratives. But let me leave you with an equally important caution. Never confuse a good story with a good investment. Stories create curiosity. Numbers create confidence. Execution creates wealth. Every quarter, ask yourself 4 simple questions. Is the business still improving? Is management still executing? Is cash generation becoming healthier? Has the original investment thesis become stronger or weaker? If those answers continue improving, time becomes your biggest ally. If they deteriorate, discipline becomes more important than hope. And perhaps that is the hardest lesson in investing. Successful investors don't marry stocks. They marry processes. Now before we end, close your eyes for a moment and imagine yourself 10 years from today. Looking back at today's Marine Electricals, you won't remember today's price. You won't remember one quarterly result. You won't even remember one particular chart. But you will remember whether this was the period when the business quietly crossed from possibility to proof. Because every legendary company passes through that bridge. Some cross it successfully. Some don't. Our job isn't to predict with certainty. Our job is to recognize the bridge while everyone else is still arguing about the road. And that is the real story behind stocks. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. If this 6-chapter journey made you look at businesses differently, not just this company, but every company, you've already earned something more valuable than a stock tip. You've earned a better investing framework. And before you leave, here's one request. Don't just tell me whether you liked this documentary. Tell me which chapter made you think differently. Was it the story of transformation? The invisible moat? The truth behind cash flow? The psychology of the market? The valuation framework? Or today's lesson on second-order thinking? Your answer won't just improve the next documentary. It will help shape a channel where we don't simply discuss stocks. We learn how to think like long-term business owners. Until the next story behind stocks. Keep questioning. Keep learning. And remember, great investments are usually discovered first in the mind, long before they appear in the portfolio. Chapter 7. The Final Verdict. Would you rather own a stock or own a story that is still being written? Before we end this journey, I want you to forget Marine Electricals for just 1 minute. Forget the charts. Forget the earnings. Forget the headlines. Forget the excitement. Now imagine someone gives you the opportunity to buy a small business in your own city. You meet the owner. You visit the factory. You speak to customers. You understand the management. You study the industry. Only after all that, someone tells you the price. Would your first question still be, is it going up tomorrow? Probably not. Because once you understand the business, the conversation changes completely. And perhaps, that is the biggest difference between investors and speculators. One buys pieces of businesses. The other buys moving prices. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Over the last several chapters, Marine Electricals has slowly revealed itself. Not through promises, not through advertisements, but through change. a change in identity, a change in opportunity, a change in capability, a change in ambition, and finally, a change in how the market has begun looking at the company. Now comes the question every investor eventually faces. If this company were not listed on the stock exchange, would I still want to own part of this business? That question removes almost every emotional bias. Because suddenly, there is no screen, no daily price movement, no green candles, no red candles, only a business. And businesses should always be judged differently from stocks. Now let's bring together every lesson from today's documentary. The sector itself appears to be entering a favorable period. India is investing heavily in infrastructure. Manufacturing capacity is expanding. Defense indigenization continues to receive policy support. Data centers require increasingly sophisticated electrical systems. Industrial automation is becoming a necessity rather than a luxury. Electric mobility requires charging infrastructure instead of depending on a single industry. Marine Electricals now appears connected to several structural growth themes. That doesn't eliminate risk, but it does reduce dependence on one single opportunity. Now think about management. The easiest way to judge leadership isn't by listening to interviews. It is by asking one question. Has the business become stronger over time? If the answer keeps becoming yes, management deserves attention. Because ultimately, leaders are not remembered for presentations. They are remembered for execution. And Marine Electricals' journey over the last few years suggests management has been expanding both capability and addressable markets while strengthening leadership depth. Now let's revisit one last mental model. Mental model, the bridge. Imagine a bridge under construction. On one side, there is today's business. On the other, there is tomorrow's business. For months, nothing seems to happen. People drive past every day. They complain. They wonder whether it will ever finish. Then one morning, the bridge opens. Suddenly, everyone says, "That happened so fast." But it didn't happen fast. It happened gradually. Businesses transform exactly like bridges. Most of the work happens before the market notices. Marine Electricals appears to be standing somewhere on that bridge. Not fully transformed. Not the same company it used to be. Somewhere in between. And investing often becomes interesting precisely during that transition. Now let us talk about something many investors struggle with. Patience. Patience is not waiting while doing nothing. Patience is continuing to observe while refusing to become emotional. If future quarters continue showing better execution, stronger profitability, healthier cash conversion, and expanding business opportunities, the investment thesis becomes stronger. If those trends reverse, discipline demands that the thesis should also change. Notice, we never fall in love with a company. We fall in love with evidence. Because evidence protects capital. Stories alone never do. Now imagine you are sitting in an institutional investment committee. Hundreds of companies are waiting for capital. Would Marine Electricals receive attention? Based on the evidence we've discussed, it likely would. Not because it is perfect, but because institutions usually search for businesses where multiple positive factors begin aligning rather than relying on a single attractive metric. Improving earnings, business expansion, management capability, sector tailwinds, constructive market behavior, reasonable financial strength. Those ingredients often attract serious long-term attention. That doesn't mean success is guaranteed. It simply means the business has become worthy of continuous observation rather than casual dismissal. And perhaps, that is one of the biggest upgrades any company can earn. Now before I leave you, I want to ask one final question. Imagine we meet again. 5 years from today, Marine Electricals has either become significantly larger, or it hasn't. Which decision will matter more? Whether today's price moved a few percent, or whether you correctly understood the direction in which the business was traveling? History quietly answers that question every decade. The biggest fortunes were rarely created by predicting next week's market. They were created by recognizing tomorrow's businesses before tomorrow arrived. And maybe, just maybe, that is the real purpose of this channel. Not to tell you what to buy, not to tell you what to sell, but to help you ask better questions than the market asks. Because better questions usually lead to better decisions. And better decisions, compounded over years, often become extraordinary outcomes. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. If this documentary made you see Marine Electricals differently, then it has achieved its purpose. But I'd love to make the next one even better. Instead of simply telling me good or bad, tell me which chapter stayed in your mind the longest, which analogy made investing easier to understand, and which part you would rewrite if you were sitting in my place. Your comments don't just improve the next episode. They become part of the next story we build together. Until the next story behind stocks. Remember this. The market pays for earnings today, but it rewards transformation over time. Learn to recognize transformation early, stay humble enough to change your mind when evidence changes, and let businesses, not emotions, be the foundation of your conviction. Because in the end, the greatest investment isn't finding the next multibagger. It's becoming the kind of investor who can recognize one before everyone else does. Chapter 8. The story never ends. Because the best investors don't search for answers. They build better questions. Imagine you're watching a movie. The hero wins. The music rises. The screen slowly fades to black. And then, just before you leave the theater, one sentence appears. To be continued. Why? Because the story isn't over. Only one chapter has ended. Businesses work exactly the same way. Marine Electricals isn't a finished story. It's a business that is still writing its future. And that is why investing remains one of the most fascinating games in the world. Welcome to Story Behind Stocks, where we don't chase candles, we chase changing businesses. Throughout this entire documentary, we never tried to prove that Marine Electricals is destined to become a great investment. Because nobody knows the future. Not analysts. Not fund managers. Not television experts. Not even the company's own management. The future belongs to execution. And execution has to be earned. Quarter after quarter. Year after year. What we did instead was something much more important. We tried to understand the direction of change. Because in investing, direction often matters more than destination. Think about standing at a railway station. One train is moving slowly, but heading toward your destination. Another train is moving much faster, in the opposite direction. Which one would you board? Exactly. Speed means nothing without direction. The same applies to businesses. Revenue can grow rapidly. Profits can double. Stock prices can rise dramatically. But unless the direction of the business itself is improving, those gains rarely last. Marine Electricals appears to be traveling in a direction where engineering capability, technology, defense exposure, industrial automation, and electrical infrastructure are becoming increasingly interconnected. Whether that direction ultimately creates extraordinary shareholder value.